Hi everyone, welcome to the 4th annual Capital Link Singapore Maritime Forum. And this is the discussion around alternative finance in the shipping industry. And we have a fantastic panel here today from all the various stakeholders in the shipping finance space, representing banks, alternative finance providers, ship owners, and charterers. So to introduce you to the stellar cast, we have Mr. TC Wong, who is Senior Vice President, Corporate Banking, APAC at DNB Bank. Mr. Gopul Shah, who is the Director of Corporate Treasury and Structured Trade Finance at Golden Agri Resources. Captain Subhangshu Dutt, who is the Executive Director at Maritime. Dimitris, Belbas, who is the Head of Shipping Finance Asia Pacific at Eurofin Group. And Kheng, who is the Regional Head Shipping Finance for Standard Chartered Bank. Welcome everyone to this forum. So just to start the discussion off, of course, with the current outlook and setting the scene, things are never dull in the world of shipping, are they? I mean, suddenly we've gone from relatively cold 2020, where people wondering what the long-term implications of COVID would be, to a very hot super cycle, almost a super beginning of a super cycle in 2021, and then suddenly to be further disrupted by a crisis in Ukraine. There's been a huge amount of activity and development that's been seemingly packed into the last year and a half. Given that context, how do you view the previous financial year, and what is likely to be the agenda for financing and capital requirements in 2022? Who would like to go first?
Well, maybe I can start.
Sorry, TC, go ahead.
Yeah, thanks. Yeah, well, 2021 had been a good year actually for DNB, as with I believe quite a few other banks. Many shipping clients were tapping the bank market, not only due to the pent-up demand for financing overflowing from the 2020, but also due to a very active M&A market. Like you pointed out, Dev, we did see a slight tightening in the banking and capital market, especially in Europe, when the Ukraine war broke out in February. And that resulted in increased funding costs compared to the last year. But hopefully, with the current developments, this hopefully leads to some easing on the funding cost side. For 2022, and perhaps the immediate following years, as far as shipping goes, we expect to continue our focus on sustainability and transition financing. So our ambition as a bank is to be a driving force for energy transition to a more sustainable future. And to achieve that, in DNB, we also announced certain targets, which include emissions reduction targets for our shipping portfolio, for example, and also strive to include sustainability clauses in new credit facilities. Yeah.
Thank you, DC. Kingston, you had a...
Thanks, Dave, and thank you very much for inviting me to the forum and the Capital Link. And this is a fantastic opportunity to kind of lay out in conjunction with Singapore Maritime. We can echo what TC has been saying. Right? The 2021 was a good year from a financing perspective for banks on the shipping finance space, and our focus likewise is kind of looking to support our clients on the transition basis. From a Standard Chartered perspective, we signed up to Poseidon Principles last year, and recently launched our net zero commitment plus our transition strategy. What that means from a shipping finance perspective is that we are, as an organization, prepared to look at new technologies that our clients are looking to invest in. May it be kind of ammonia dual fuel engines, LNG, etc. But we want to kind of look at it more holistically, as we believe transition needs to be just in any efforts that our client base looks to improve their carbon footprint. Whether it's in an operational front or looking to kind of invest in ballast water treatments to prepare for the coming year. So that is where our focus has been. That will be continuing to 2022, and likewise, there will be heightened concerns given whatever's happening in Ukraine, more uncertainty, but the fundamentals remain the same.
Dimitris?
Back over to you.
Yeah, Dev, thank you very much, and thank you to Capital Link for the for the invitation and the great event. I echo Kexim's comments. I would like to go a little bit back. Not that long ago, at the end of 2019, everybody was talking about IMO 2020. Then COVID-19, hit our shores in about February, March 2020. Then all discussions stopped. We see 2021 as a continuity of 2020, where most banks, especially in this part of the world, put the pencils down. Asia remembered SARS. So very quickly, everybody went into a defense mode, trying to be, risk averse, trying to see who will be the survivors, which sectors will be, impacted and which will not be. With the exception of, obviously, the big international ship financing banks that, carried on, albeit with delays, and Chinese leasing companies, most of the Asian financial institutions really slowed down in 2020. So come 2021, they had to meet their budget. They had to, finance their clients and look for new clients. But most importantly, and I guess, all my fellow panelists will agree, shipping finally stopped being the ugly duck and became, if you want, the beautiful white swan. We've heard non-stop about aviation and how lenders like aviation and airlines, okay? I think it was very nice in 2020 and 2021 to see our companies, okay, our clients outperforming the market. As consumers, we paid the price, but as people working in the industry, okay, it was music to our ears. So I see, if you want, coming to your question about 2022, we see most of the companies doing extraordinarily well, great results, great profitability. We will talk about it later on. Thankfully, not a huge, order book, at least in some sectors. We can talk about container ships. So banks have no difficulty whatsoever financing the clients, looking for new projects, okay, at even low LTVs, great terms. The survivors, if you want, from the crisis of 2008, 2010, 12, 14, 16, every year was a bad year until 2020. So I believe shipping and shipping finance come forward for this year. Okay, we'll have another great, if you want, result.
Thank you, Dimitris. Now, if I can bring in the other side of the equation, the borrowers and the finance users, Captain Dutt, as a ship owner and operator, what would you view the last year and the year coming to be?
Yeah, hey, thanks, Dave, and yeah, thanks for having me on this panel. So yes, we heard the three lenders, and they are very optimistic. Yeah, for OM Maritime as a borrower, yeah, it has the 2021 has really been a roller coaster year, a roller coaster which never went down, and nobody was really prepared for this kind of activity. The number of transactions are similar as the movie Fast and Furious. They came by, the ships got snapped up. If you were a bit slow, you were just left twiddling your thumbs, So yeah, it has been a great year. I must point out that in this environment, you have to have a lender who is equally fast and responsive, because there is no time for the traditional formalities prior to lending. So I must really commend our lenders, Oaktree and Meerbom, have been really responsive. They have taken an almost alignment of our view on the container market. And that is why we were able to close as much as 11 transactions over the year. And of course, we saw the prices touching unbelievable levels. But I think that didn't deter. Of course, some of the mechanisms were adjusted, but basically the lending continued. So, and without compromising the risk, it wasn't indiscreet decision or something. So they basically covered their bases and did so. So looking at it, I think I share the view that 2022 will remain a positive year. The only point I keep seeing in the market is there are no more ships available for sale in this year. Maybe some odd here and there units. Yeah. So that's my view in summary. Thanks.
Thank you so much, Captain Dutt. And now, finally, last but not least, Gopul, from a Chartreuse perspective, who's in the market now for ships to carry all the excess demand that you're facing. What are the challenges that you see?
Well, no discussions can be complete without, one of the most remarkable year, which was 2020. And the impact of it, and we've seen, the wave. It came, there was an ebb, and then we see a surge in commodity prices, a complete change, from a situation with a negative, cost of fuel versus today, whatever it is and where it is going, almost we are into a situation where we face energy crisis. But in short, we did end up with a very, very good year because of the surge in commodities. And I would say that, a lot was due to the revenge, in the demand, which came back, and the constraints on the supply side. And one of them, which was contributed, because of the logistical issues as well as lack of ships or, any restrictions to do with COVID. So a very challenging year in terms of VUCA, which is volatility, uncertainty, and ambiguity as far as the market is concerned. Liquidity in the market has been flush, but where was it? It's $1 million question, with whether it went for the real business or whether it was paper. And that liquidity has caused a lot of volatility and managing risk. And I think going forward, although the returns and profits look very good and attractive, I think the risk will remain heightened as far as the real economy is concerned, because there are many things which are coming up in the market, and to get the supplies right to the customers becomes a very important challenge. And as Mr. Dutt pointed out, that look, the availability of ships is is pretty low as far as the supply side is concerned. So we will face a challenging year as far as servicing our customers is concerned. But having said that, fantastic year continues to be, because the commodity prices are high. But the risk, there are too many risks, and keeping a tab on the risk and managing your business well becomes a very big priority, and going back to basics.
Thanks, Gopul. So I think one theme that seems to be sort of coming across is the lack of availability of ships at the moment for financing, and the market being sort of very active. Could either Captain Dutt or Gopul talk about whether that's exacerbated by some of the demands for greener ships? Is that where you see that financing is more readily available for greener ships, or is it just a factor of all ships being sort of in high demand at the moment, given the market on commodities at the moment?
Okay, I'll attempt that. Sorry. So the shortage is now really in the container ship sector. Right. The other two segments, the bulk and tankers, are okay. They're balanced, because there was you didn't have this frenzied buying and they were all second-hand ships, and they were pretty old ships, which would really stick out like a sore thumb when put against their green cousins, So yes, I mean, today the idea was to just get hold of a ship. Getting the green ships is something in the long term, and mostly it would be on the new buildings. There isn't very much that can be done on the existing ships. So yes, on the long-term strategy, all the container lines who are flush with cash are definitely now able to look at green strategy. Something, had you asked them 3 years back, they may not have been that confident. So we will see more of that. Primarily, it's having deep pockets. Then you can look at alternate fuels. You may not go right on some of them. May go. So that's the perspective on green strategy. Yeah. Sorry, go ahead.
So, this demand supply goes back in time as well, right? Because, 2019, 2020, we had the low period and many ships were withdrawn from the market. Many remained unused as well. So, there were buildings which basically, went in for scrap as well. And the new regulations started to come in, around better green managed ships, and that did create some sort of, I would say, scarcity as far as the space is concerned. And it takes time to basically build a ship, and the prices have increased as well in terms of the cost of inputs. So many buyers, were also in a dilemma that, considering COVID and the uncertainty, is it the right investment to make? And even today, people don't believe, that new investments are something which one should be making, because they don't know whether the prices will sustain, and the returns would basically justify the risk and the investments. So there is that, that risk averseness as far as investment is concerned. So, until things change, and, I think there would be some squeeze on the supply side, and we would see rate hikes happening, as far as the supply chain is concerned. So, that is something which we need to keep in mind. It's a cycle and it's cyclical, but it may take some time before we are out of a low cycle as far as the supply is concerned.
Understood. Thanks. If there is no other comment on this, then I'll just segue to another related point on this, which is how the lenders are looking at their green financing strategy in light of these challenges, which to my mind have been exacerbated or sort of brought into focus with the developments where in Ukraine, where so much of petroleum is now sort of petroleum and gas is being held up due to sanctions on Russia. Now, is that likely to push the decarbonization strategy further than other strategies have worked in the past? And are you facing increasing sort of demand from your customers for green financing, for sort of ESG linked financing in respect of their shipping?
I'm happy to take this first.
Sure,
so maybe to address your first question in regards to whatever's happening in Ukraine, I mean, personally, I do believe that will accelerate investments into more ethanol. I think we've been, I think we are at a phase of business where ESG is part and parcel of everyone's business model. That is a risk that you need to think about, that we discuss with every single client that we have, understanding their climate impact. And it's a matter of, where are you in that journey and the choices that you're making. One of the key takeaways that we have, and Captain Dutt and Mr. Shah would be able to attest to, is that whilst the end goal is the same, everyone is looking towards a net zero by 2050. The way everyone is taking to get there might be slightly different. And we have seen today already 30% of today's new order book has dual fuel engines, and largely the large proportion will be LNG dual fuel, right? And the reality is that is the step that the industry will need to take. I mean, the availability of gas as an alternate fuel makes the most sensible choice. But what Ukraine has shown us is that that process needs to accelerate. I think the jump to a more sustainable biofuel, whether that could be ammonia, hydrogen, or methanol in the future, the world has woken up, that reliance to kind of fossil fuels comes at a cost, especially with heightened political uncertainty. So that investment needs to go. Personally, for Standard Chartered as an organization, investing sustainable linked transactions are part and parcel. Right? I mean, we don't. It is something that we incorporate in every discussion that we have. So it's not anything special. I think where we want to focus on is understanding how each and every one of our clients are going through this journey and how we can support them along the way. Again, we do believe transition needs to be just. And then from a shipping perspective, that means supporting whether that investment goes into a dual fuel LNG or a dual fuel methanol. I mean, the key aim is what can we do today, and then let's not wait for perfection, stop in the way of good, and doing something now. I hope that answers your question.
Absolutely, and I think there's a very good way to summarize that. Don't let great be the enemy of good. So I think that's a very valid point. TC, Dimitris, if you'd like to, please.
Maybe I can go next. Well, I echo King Sin's comments. We also think that the situation in Ukraine does, to some extent, accelerate this transition, energy transition to decarbonize shipping. We continue to focus on companies that are more forward-looking in this aspect, and not only the investments by the shipping company is important. We also see investments that are land-based is also very important for the decarbonization of shipping. It is estimated that north of 1 trillion of investment is required to decarbonize shipping, and the bulk of that is actually very related to the infrastructure developments to enable these alternative energy changes. This gives a sense of the magnitude of this task ahead. So we hope that there will be more collaboration within the industry, not only through the supply chain, but also with the regulators and the government. So that is perhaps a little bit of a different answer to your question. But yes, we continue to see importance in focusing on sustainability and decarbonization.
Dev, if I may add, obviously the war in Ukraine accelerated some trends, but especially when we're talking about energy mix, and I think what is at stake right now mostly is Europe's ability to satisfy, if you want, its needs, energy needs for its population. These are not things that can happen overnight. And yes, there is, if you want, a question about, and actually on a daily basis now, we receive messages or we see, press releases or news releases about, their energy mix, what they're going to do, where they're going to get, gas, oil, everything. And, somebody said that, in the past that God is a ship owner, okay? Resources are very far away and consumption is, you need ships to, transfer all the, the commodities and the goods to the consumers. But all these things do not happen overnight, okay? Even like, to give you an example, Germany just announced they will consider, bringing FSRUs off their shore to, bring LNG. These things, could have been thought years back, okay, decades back. The thing has, accelerated the trend. One thing, if you want, that we see quite often these days is actually the S on ESG. Not only the environment. Our lenders, our clients are in constant discussions on where do they, lift cargoes, where they dispose cargoes, who are the charterers, who are the users, okay? The environmental aspect is one thing, the social aspect is another, I'm tempted to say even bigger thing right now, especially, within banks and their compliance departments. My 2 cents.
That's an interesting point you made, Dimitris, about the aspect, of the social aspect. One point, and I'll just very briefly ask Captain Dutt about this. Have you seen an increased scrutiny about crew practices, about whether what the treatment of the crew is, or anything around those that have come in under scrutiny from your lenders?
Okay. No, not specifically. No, we, of course, we have maintained, as far as practicable, all the benefits to the crew. I know where you're coming from, because 2020 onwards and 21 has been a very, very miserable time for ship's crews, primarily because of COVID regulations across different countries, inconsistent policies, which obviously most countries did not know how to react. So the safest reaction was no crew change. So people ended up serving 12, 15 months when their normal tenure of duty is 4 months. So hopefully that is behind us now, and as maybe except for China, as other countries normalize, the basic rights of a crew member would be met, and they would be allowed to get off when they finish the tenure of duty. I think that is fundamental. But aside from that, no, so long as the crew are engaged on the typical contracts, that is probably adequate for at least our lenders. Yeah.
Great, thank you. So just coming back to sort of the more current outlook and what you see going forward, what would you say is the biggest threat to the availability and variety of ship financing for the next, say, 2 years, if you can just sort of get our crystal balls out? Of course, we have the predictions, or not predictions, but the Fed's intent to raise the rates quite aggressively. And there is also persistently high commodity prices, which we've seen a lot of companies struggle to sort of meet margin calls for. So maybe just starting with Gopul on this one, we could have a perspective on what do you think is the biggest threat on the availability of financing for the shipping space?
Well, I think, liquidity is there in the market, So, it's all about risk, returns, and, the outlook for the market, right? And so far, it looks like, at least, from a supply chain perspective and a commodity boom perspective, the demand for the shipping will be there at least for the next, couple of years, right? And it becomes attractive to finance, and also, able to manage your cash flows as well as, get the right returns. After that, it's a million-dollar question, right? So the challenge is not on the financing, because, as Kheng and TC Wong mentioned, right? Financing is not a problem. They are looking to lend to the customers, their customers. I think there will be compliance issues, when it comes to lending. You heightened ESG now with the sanctions, then, the social aspect of doing business. All these things would basically be factored in as far as the lending is concerned. So that could become a bit of a challenge. So that's one. The other thing the lenders would look at is to structure transactions where they can, catch the collateral as well as the cash flow. Okay, so these are the things which basically, if a shipping company is willing to, structure it more tightly as a financing package, it would fly. Otherwise, shipping companies would have to do better, get themselves rated, and go to the capital markets, like issue bonds or whatever, if they want more flexible source of financing. And if they are listed, then, issue equity. So my take is that, look, I think liquidity should not be a problem, but, the stepping up on the compliance, the cost of compliance, as well as managing your business well, and with discipline. That becomes a very important issue, and that brings the question is, the biggest question is that is the shipping company agile? Is the company agile enough to manage and navigate the volatility, the uncertainty which crops up very often, because the cycles have shortened as far as the volatility and the cycles are concerned, and that impacts the cash flow as well. As you rightly said, margin calls keep on coming, right? So, if the company is strong enough, able to manage their business well and their cash flow well, I think financing is available. It's not a big deal. The question then is that who is going to finance and who is going to build the ships? And is there enough capacity available to build the ships? That's $1 million question now.
Maybe just on that question, who's going to finance? Dimitris, would you be the one? You're on mute, Dimitris.
Yeah, it was a wise choice. I was going to say Gengsin or TC, maybe, start or who's going to finance. My personal take is that money will be made available.
Right.
Okay. I will be very, very worried, very, very concerned if suddenly we start hearing about greenfield shipyards, okay, being reactivated, all the things that, brought the industry down about 14 to 8 years ago, all these greenfield yards that, were promising that they will build everything under the sun. And it took a long time, especially for the Chinese shipyards, to consolidate and streamline their operations. It's a good thing right now that, if you want, the new building orders are capped, like to the extent that you cannot go and order a vessel and get it in 1 or 2 years. It's good for the ships in the water. Maybe not as good for the environment. I'll come back to that, but it's very good. And we see with a lot of our clients that used to order ships that right now they have 0 new building orders or very, very limited. Why? They have no visibility on what will be the winning trend. There are trends on the fuels, but nobody knows who's going to be the winner. And in some cases, if you want, in shipping, that has proven to be the case in the past, the first mover advantage is not necessarily a big plus. You have the innovators who will push the industry forward, okay? But sometimes waiting to see, how it's going to end, and for the expenses and the cost, R&D, cost and construction costs to go down, it pays off sometimes to just wait and see what will be the technology of the future. So it's a good thing that, we don't have a huge new building order book. Not that good, I will tell you, for the banks, because banks need to meet their budgets. Banks need to, keep doing business. They want to focus on new environmental friendly, if you want, build ships. And that's why we see a huge competition for the top tier names, the ones that order the dual fuel ships, the environmentally, friendlier ships, that all the banks want to do business with them. Okay, so money will be made available. Now, going back, if you want, to the second-hand market, and Capt. That said that there are not that many ships out there. People are, especially because even if you were to sell your ship, what are you going to do with the money? If you cannot order a new building, you have just, exited the industry, and it's very difficult for you to come back in. So I think hopefully we may see ships slow steaming if you want to comply with the environment. Okay, hopefully some regulation to say that, reduce the emissions of the existing fleet in order to, if you want, preserve the environment and find, if you want, win some time, gain some time until we have the technology of the future becomes present, and now we can go on and start building, better ships. I don't know. Gengsin, TC, what do you think?
Yeah, I echo the comments as well. I think that capital has been made available throughout the years. It's a matter of price and the financing structure. But maybe just to add, I mean, what could be a bit different this time round is that we do see that some equity providers have been stepping up. I think there is increased recognition that, you know, shipping being a highly volatile industry is not really meant to be a highly levered one. So we do see a little bit of discipline, more discipline in this aspect, and also on the lender side. Lenders are less keen to provide high leverage, and especially when markets are at a high. I mean, of course, different sectors are at a different stage now, but that is at least our observation.
Excellent.
I do sense this. I think, you know, I kind of echo the points being made, right? So rather than say, you know, what's available, let me share what keeps me up at night, right? As a financier. In addition to, you know, the whole heightened political uncertainty plus the underlying undercurrent of environmental, we are already at an inflationary market. You know, asset prices, especially in certain sectors, are an all-time high. If you take a step back, it's across the board, right? Regardless whether it's shipping, this includes your kind of property, real estate, you know, commodities, etc. So we are already at an inflationary price where asset prices are looking forward. Governments are looking to counter that via kind of both fiscal and monetary policy. And given where government's been spending on COVID, the kind of policy is to kind of available is to raise interest rates. So there could be a period where we are looking at an inflationary period plus heightened interest, interest costs. I mean, I tell my junior bankers, which grew up in the last 15 years at 50 basis points LIBOR, 1% LIBOR, that, you know, do you recall what LIBOR was in 1990? It went up to 8% at one point, thanks to Mr. Greenspan. So, and it's, whilst I don't foresee us going to that particular levels, we could be in a tricky spot a couple of years down the road where you have the dual storm of stagflation, right? So high asset inflation plus high interest rates. So those are the things that I kind of worry, and companies that have the ability to manage that, have the discipline to utilize the cash balances that they have today moving forward. That's where we will differentiate. Where we'll be allocating our capital, and like Mr. Shah pointed out, companies need to be nimble to react to especially heightened volatility as to late.
Thanks, I think so. I think just maybe a related question to this is if this is the state where there is liquidity which will be made available for the right projects, there are obviously clearer ideas that every financier has on what is the right project. And both Captain Dutt and TC Wong mentioned equity providers that are coming into the market. Captain Dutt specifically mentioned Oaktree, which is a private equity fund. Are you seeing more sort of private capital players entering the market? And again, Dimitris, I'm not excluding Eurofin from this discussion, but are you seeing there is more interest and more sort of innovative, I wouldn't say necessarily innovative, but more sort of structured transactions that are being offered to ship owners and charterers to meet their ship financing needs compared to maybe 5 years ago, when the interest in these types of in real assets was relatively limited?
Should I just take that first? So yes, I agree with all three, TC, Dimitris, and Kheng, that liquidity is available, but from OM's perspective, we are the equivalent of a SME borrower, really a relatively small ship owner, nowhere near the big time companies. So you are disadvantaged to some extent because you may not fulfill all the criteria of a typical ship financing bank, etc. That's why you turn to alternative sources like Oaktree Private Equity Fund. The intangible there is the speed and the ability and the certainty of performing the transaction, more or less takes care of any additional pricing. Typically, it would be more expensive, but in today's market, that is not a concern. Really, the speed and the certainty is far more critical. Yeah. Also, I'll just give you some numbers to compare for a green vessel. The difference. A 8,000 TEU new building out of Korea would cost somewhere in the region of 80 million. A dual fuel one, the same size, would cost 125 million, almost for 50% more, which means the charter rates to break even would be that much. The charter rate for the single fuel is about 29,000. The charter rate for the dual fuel is 42,000. So you would then have to, on a 5 or 10 year period, earn that much more just to break even on the dual fuel, and it's not sure whether all your customers would be willing to pay the premium. I mean, assuming when the market comes off and we get back to terra firma in the next few years. Yeah. So that's the other comment I had. Thanks.
TC, you alluded to equity players. Do you have a view on this?
Yeah, well, we do see some equity players whom in the previous years had burned their fingers in shipping investments. Some of whom are coming back when they see that shipping had been relatively stable over the pandemic, and in fact, for some sectors, booming. So, well, I think that is part and parcel, I guess, of equity investors. But in terms of longer-term investments into sustainability, I do hear Mr. Dutt's comment that being a smaller shipping company, it might not make sense to be as experimental in this aspect. But we do see bigger shipping companies investing in advanced technologies, experimenting in this aspect. It might be difficult for banks to participate directly in those experiments, but we do favor providing finance to such forward-looking companies. So in a way, that equity investment results in them obtaining more favorable banking finance as well. So that is sort of an indirect result of that.
Dimitris, Gopul, Kheng. If not, I would like to just briefly touch upon sort of developments in the Singapore market where we are all based, and how you've seen that sort of change in the last couple of years. Has there been a drive towards internationalization, or do you feel that there is still Singapore is sort of still a regional hub rather than an international hub, as the aim has been to make it a international global hub of ship financing and ship owning?
So Singapore is evolving into an international hub, and it will take some time. And some of the initiatives which Singapore has taken has really benefited. One of them is to attract the regional players, including the lenders from China and the alternative market players, which you just mentioned, like Oaktree and the others. And there are a lot of other incentives which are being provided. So definitely it is gaining momentum, and with whatever happening we see in Hong Kong, there's a lot of shift into Singapore as far as a lot of banking activity and financial activity is concerned. So I think it's a good time, for Singapore to basically ramp up its efforts, with a lot of insurance companies also being attracted in the market, right, in Singapore now.
I think if I may, yeah, sorry. Kheng, you want to go ahead first?
Yeah, sure. So I think I agree. I think Singapore is well positioned to be a global hub, and they have one best kind of maritime port already consecutively for multiple years, right? And we do see improvements every single year. I think from the financing side, unfortunately, we all know in the last couple of years there has been several departures of notable European banks, but that's part and parcel of the financial world. And we are speaking to kind of MPA and the finance authorities to see how we can kind of grow the support financing system across the board, right? Regardless whether this is banking, insurance, or AI, which other regions might be slightly ahead. But I also want to kind of touch upon slightly in regards to kind of talent development. I think that's something that it's very important if we want to grow Singapore as a hub. And we have been working with the Singapore Maritime Foundation, with university students to nurture their interest in shipping. A challenge was done the last couple of weeks. We worked together with them, posing questions. The same questions that we're asking today to ourselves, to university students, to see the kind of solutions that it can provide. So we do see the framework that's been put together in regards to kind of nurturing talent, the digitization team that's current with Singapore Maritime Week, and pushing now with opening borders and loosening controls. All moves point to the right direction. So.
Dimitris, if we could wrap. Sorry, thanks. Dimitris, if we could wrap up the discussion for us, please.
Yeah, I was going. If you want to say more or less what Kheng said, we had in the last 4 or 5 years we had a good number of European lenders exiting shipping. Some of them exited shipping altogether. The vast majority of them, however, just exited Asia. It became very expensive for them. Cost of doing business in Asia is, especially if you want out of Singapore, Hong Kong, very expensive. And for a shipping desk to support a whole banking license, operation is very difficult. So we saw several banks leaving. Having said that, we are firm believers that the gravity of shipping, and it looks like shipping finance is moving. The center of gravity is moving east. So Singapore has been extremely successful in attracting banks from Japan, slowly Chinese leasing companies, Taiwanese, banking institutions, Korean banks, Australian banks. I think Singapore has become the center of Asia Pacific as more and more, if you want, lenders become active in this part of the world in the shipping industry. Singapore will become the port of call for most of these lenders. Let's see if the Westerners will, come back. But as far as Asia is concerned, Singapore is definitely the center of shipping finance.
Now, my role here is a little bit difficult to remind everybody that unfortunately we have run out of time. But also it's very pleasant because I'd like to thank you all for a tremendously interesting discussion. Thank you for your collective brain power. Devottam, thank you for moderating. And again, all of you, tremendous thanks for joining and sharing your insight.
Thank you so much.
Thank you very much for having me.
Thank you very much.
Thank you.
Thank you very much, Nicola.